Welcome to Insights. I'm Eric. Thanks for joining us here today. I'm going to do a quick review on wheat. I want to brush over some of the setup in terms of its evolution of the trade in terms of 3 time frames. But I'm also going to go down and talk about the energy build in a way that's far more complicated than we normally do. I want to shed some light on what we do when we run reports versus reviews. Reviews are really updates within the evolution of the trade, whether or not there's a signal and how it's setting up. I like to focus in on resets and flips and other things in order to talk about the setups properly. But there is a lot more detail that takes place. We can study energy in particular, and we're going to focus on that today. And we're going to focus on wheat's energy build, which is 19 and -6, and it may not look super impressive, but when we start to narrow it down, it is something that stands out. And this information is really not generally provided inside the matrix, the traditional matrix. You can glean most of it if you're very good at reading the DI charts and good at using the matrix, highly experienced. But if not, and this is something that we talk about when we go into the reports. I haven't done a wheat report. I have done a soybean report, and we have used techniques such as the ones we're going to talk about. But the whole point of this is that wheat, while it is in a primary trend decline one, and that's largely because the primary trend is starting to get a little bit extended in time, it doesn't mean that you want to stay away from it. Really, the primary trend's a little bit extended. The real concern lies in the weekly price and time cycles. Here's price and here's time. The price cycle is almost 3. The time cycle is almost 2.6. And we have 2.7 and 2.58. And those are pretty extended. It prevents us from chasing. Anyone who's experienced in reading the matrix and watching these reviews and learning more about how to read the simultaneous nature of the composite trend, which we discuss as 3 time frames. The composite trend scores 1.2, and that's why it's a late cycle. It's highlighted red. You can't chase this. Now you could be long this, and wheat may. It's possible wheat breaks out and jumps the creek again, but again, there is no opportunity here to trade it within the evolution of the trade because the weekly time cycle is so extended, and we're just going to wait for a better reset. And when it comes, this will be something we'll talk about in a review. But I want to talk about energy and how wheat setup is, how it looks, and what we're not really seeing. I've talked about and touched upon this, and when we see soybeans energy build, but wheat follows along within that as well. And to do that, I'm going to have to open up my detailed energy build report database. You can click the links here, and you can get charts. These are static charts, but I need dynamic and interactive charts. And the only way I can do that is I have to tap into this, and I can include these inside reviews, and I like to include these inside the reports because they give a level of detail that's far more significant. And not a lot of people watch the videos and the reviews or are that serious about the grain market. There's a lot of people who subscribe to the matrix and focuses on the equity markets or focuses on gold or focuses on Bitcoin. I focus on everything. I mean, I'm an opportunistic investor and trader, and whenever there's an opportunity, it really doesn't matter. The way the matrix defines information, it's standardized across all asset classes, and the message is the same whether you're talking about the grain market, or if you're talking about Bitcoin, or if you're talking about gold, or if you're talking about the S&P 500. We're looking for particularly strong energy builds, but we're really looking for alignment of the primary trend and the composite trend up. Wheat's composite trend is triple up, and we talked about in the matrix just before we flipped over to this, it's late cycle because the composite mean score is 1.2, and that's not something that we want to chase. But if we take a look at the energy build, I mean, what are we really dealing with? It doesn't look all that impressive at 19 and -6. I have it highlighting both energy builds and all the, I haven't touched any of these components. This is the normal energy build that we see. If we narrow this down to the bull energy builds, it shows us what's showing up, at least in terms of the energy build on the bull side. You can see the energy build here. that turn the market, and we haven't quite had a reading that has generated another highlight box to try and turn the market. We turned the market multiple times here. I didn't label all of these with green cups, but until the market peaked out in about 2000, well, this looks like about 2007, and then we've rolled over ever since. There's a lot of work that wheat needs to do, and it's going to need energy to do that. And how much energy are we really looking at? So if we refine this, first thing I like to do is take a look at different types of calculations of DI, and this one's the standard deviation calculation method. You can see that it changes where the energy builds lie. Not much in terms of repositioning. We can see there's an energy build over here. It really shows us it's more difficult to generate this type of energy build based on this calculation. These are much stronger. And along those lines of along those paths, we can focus in on the energy builds and narrow them down even more. And we can ask the computer, show me the really strong ones, and it starts to highlight and reduces the number of signals already. And we can see there was a lot of energy builds here, and that's what I suspect we're going to see over here as we built the energy to power up for this advance. These other energy builds were after the sell-off, which they did rally afterwards and market turn, but this was after the market peaked out. So these were delaying actions more than anything. But I'm thinking if this market is really going to jump the creek, it's going to need energy builds, and it's going to see multiple ones. And really, we've really only seen maybe one or two yet, depending on the type of calculation method we use. Here's one and here's two, but we're likely going to see one, two, possibly even three. And that's where we have to be guarded against. We have to be guarded that another one's coming. And in general, energy builds don't come as the price rallies. They come as it turns over. So we have to be careful not to chase this, and we have to wait for a reset, and resets tend to happen as price curls back. We can also focus this calculation even further and tell me which energy builds show, and we take out what they call spreading activity, which is the measure of uncertainty inside of a market, and it tells us which are really big energy builds and very specific ones in which funds can spread long and short contracts against one another, and it's picked up inside the FTC's, what is it, the Commitments of Traders report. And now we narrow down to really two energy builds. This was a big energy build right here. What eventually turned this market up, it didn't flip and generate any new bull market, but this was probably the biggest energy build right here on record, right there. And this is the energy build that spawned the move that's here. Now we did see a halfway decent energy build, and if we pull this up right about here, it's right about there. It just didn't get registered, but it's hard to, it's kind of like a charts EKG chart for your heart. These are pulses. This pulse was big enough, it doesn't really register, but this is better than a flat line. So this is why this market turned right here, because of this little hump. So we take some of this off again, and I like to focus outside and just focus on the DIWA calculation. It's a little bit less sensitive. I think what we're going to be doing is we're going to set up for multiple builds here, somewhere over here, and it runs the risk that this market will have to curl back in order to generate that build. What we can do, though, is that this looks kind of deceptive. It doesn't look like the energy build in wheat is all that strong. And if we go back and show, when I look at these charts quite often, I don't post these inside the matrix. These charts, and if I take some of this off and pull us back to where we are, these charts represent the major players inside the Commitment of Traders report. You have the commercial traders and the retail traders. And if I eliminate the retail traders, I can do that by going and selecting that. We focus on the commercial traders, and we're focusing on the bullish action. We can change the calculation to narrow down the intensities and narrow down the width. You get a similar picture of what we were looking at over here, except it's a little bit wider and a little bit more detail. And I suspect we're going to have another energy build like this, and a series of energy builds as we grind. It can go higher. We've already had 1, 2, 3 of them. But each time energy builds do show, the market does pull back. And what we don't see is that, and if I narrow this down a little bit more, we don't really see how strong the market is. In terms of this calculation, this market doesn't look all that strong. There's really no energy, and they're not comparable to 2001. But when we look at this, we can see that we're starting to make several series, and maybe we have two of them. And the bottoming pattern might even take on a couple more heads here, or a couple more like mountain peaks yet to be formed. One, two over here. Perhaps this goes up and chops down. But this energy build is far more stronger than is being advertised in terms of just even the traditional DEI. It's one of the reasons why I know that wheat is the long-term trend for the reversion of the mean. I've talked to some people about that. I know most people think I'm full of it in terms of I don't understand the grain market, so how can I see those calls? If you watch the soybean report, you can see the charts, and I talk about in a little bit of detail in terms of the long-term trends where soybeans and corn have performed quite well, but wheat has underperformed for various reasons, and it's really cyclically due for recovery. And those are things that you can track, and I suggest people watch the soybeans report for a discussion about that. And you can go and pull down the files that's included in a report, and you can see the long-term charts, and you'll quickly understand what it means for a reversion to the mean. A reversion of the mean won't take place in 6 months or a year or two. It'll probably be a 10-year period. It's if you have a rally inside the grain market, it's going to be that reversion that's going to favor one of the grains over another, and wheat is really set up to perform. Now, whether that's a performance outperform as everything does poorly, or outperformance as everything rallies, well, that really determines whether or not this thing's ready to jump the creek or not, and that requires energy. And as we see here, we're seeing the initial stages of energy building. And if I switch back to some of these and take off a little bit of the deselecting at the tools, we can see that these energy builds, they're there, but wheat doesn't, it's not quite as strong, and I'm suspecting that there's going to be far more cups that are coming to build this, to power this, to really break this, and it's going to have to break this downtrend line. This is something we're going to talk more about. I may do a wheat report for because of the significance of the outperformance that I expect for everyone, including subscribers and non-subscribers. But I haven't done that. I'm just trying to open the door to the discussions that what really takes place behind the scenes when you have the matrix. And in terms of the matrix looks like this. You click, you get various charts. These charts are static. There's more going on. I mean, it pays to have conversations not only with me or with others that follow the matrix as well, because they're going to see things that you don't see. And I know that these reports that I have generated a handful of them, and I don't think people have tackled too many of them. There's been quite a bit of interest in Bitcoin and soybeans, but this is what it takes. I mean, this is how I look at stuff, and again, it's not intended to tell you what to do. It's what my observations would be, how I look at stuff. It'll change. It'll teach you how to look at the matrix in a different way. The matrix exists in this format, and this is how I use it. I manipulate it in terms of the charts a little bit differently to understand where the power lies. But again, the crux of the matrix is to follow the primary trend and the composite trend. The primary trend has to be up, and the composite trend has to be aligned. And you can't be buying assets in which the cycles are extremely extended. And wheat, in this case, over at least the very short term, is extended and not something that you want to chase. And you can see that even for corn, it exists as well. So these are things you can follow, and again, there's other things to talk about, and that's what reports are designed to do. So if you have any questions about anything we talked about here in this review, let me know. If you're interested in any of the reports, you can follow the links below and you can find them. And go on the website. It says on the pull down banner, it says reports, and you can go and they all have individual keys, but that's what they're really designed to do. They're much longer than a traditional review, and they're far more complicated. They're really not for everyone, and I'm sure they're not going to be interesting for everyone, but those who do have interest in you're going to look at a market in a way that's much different than even the reviews suggest. And that's something that I thought needed to be introduced. So thanks for watching the review. The markets are going to be open pretty soon, and I hope you guys had a great weekend. And if not, we'll talk to you sometime next week.